All right. Good afternoon, everyone. I'm Michael Klein, Vice President of Global Revenue Management for Hyatt, and we're going to switch it up a little bit. We had 2 rounds of airline. We're going to go to the hotel side of the revenue management industry and talk a little bit about what's going on, how we had a COVID impact, and then really how we got out of it post-pandemic, where we are today, and how we've had to really rethink things through this. Eric, you must have stolen my slide because it looks eerily similar. But if we take the U.S. hotel industry performance, this data comes from Smith Travel Research, benchmarking service, and you look at the Great Recession and the COVID-19 period, you can see that it is night and day. One, in terms of the trough that exists from the actual event of the Great Recession in terms of overall room demand, but also the length of time in terms of the recovery period, almost 10 years to get that demand level back. If you look at COVID, although to the lowest demand levels we've ever seen in our history, so very similar to what we've seen on the airline side, the bounce back, I think, and the indicators for the hotel side are going to happen ahead of time in front of the airline industry, just given some factors. So I think there's some good news there in our forecast as we look at it, and we'll take a look at slides in the future here, that we're getting to that point where we're starting to get back towards those pre-recession levels of 2019 with respect to COVID. I want you to think about this, though. If you take the business mix that our hotels really had and you turn it completely upside down, that's really what we're dealing with today in our environment. You can really see back to quarter 2 of 2020 when everything started to drop. In a matter of weeks, we hemorrhaged about 80% of our entire group business for the year of 2020, even beyond into 2021, in some cases 2022. A lot of that business did rebook eventually as we got through, vaccinations were created, but that red line, that group business really hemorrhaged right away. And what you see, the business travel, companies came out with policies, obviously, against traveling, and what we were really left with was leisure. And similar to the airlines, you can see the road to recovery for that leisure segment within a post-COVID environment really is what led the way for us to begin to fill our hotels. And keep in mind, our business model in a hotel is vastly different, right? The entire industry has moved more towards an asset-light model. We have owners, we have operators. A big portion of our business is franchise. So when you think about the owners and operators that were struggling, maintaining their assets, keeping them open, at one point our entire industry in the United States was 50% closed. Same as the 15% capacity you heard on the airline side in terms of the planes. As we started to open, you saw a lot more on the select service side, lower costs to open. But we still, even though we're about 98% open as an industry, we have 2% of luxury full-service hotels in northeast cities and northwest cities that are still in heavy union areas that aren't yet opened to date, especially in the international areas that are not recovering as fast as the United States. So taking this and saying, how do we rethink things and how do we change the way our hotels act and react to the different market mix that we're starting to see, which is a recovery completely controlled by leisure growth, although business travel and group are trending, as you can see on this slide, in the right direction. So when I rethink through the headwinds that we've had, some of the quotes that I love, and I can't really read too well there, so I'll read it here. Business travel, as we knew it, is never fully coming back, says Brian Chesky. And down here, my friend Bill Gates says more than 50% of business travel will disappear in post-coronavirus world. I cannot wait to prove them both wrong. And to tell you the truth, I'm going to do it by the end of this presentation. CDC recommends suspending large events for 8 weeks. We all remember that during the COVID period. So many of our full-service convention hotels rely on banquet and events, rely on big conventions. That completely turned those hotels, big convention box hotels, into something completely different, and we'll go over that in a second. if you take a look at some of the questions we had to ask ourselves, I literally just can't even imagine going through this once again, but in the COVID environment, we asked questions that we never would have even thought of. For example, how do you turn a 2,000-room Hyatt Regency in Florida from a heavy convention hotel into a profitable, leisure-focused hotel? You know, these are things that we never even thought about. For ages when that hotel opened, in one of the biggest convention city markets in the world, this hotel has always been a big group hotel. So what do you do in those circumstances? How can we drive longer lengths of stay in heavy leisure drive markets to really replace the group and the business midweek? Those were things we never really had to worry about. That was our bread and butter. It always happened, seasonally, historically, every single year. How can we better forecast short-term demand levels to cope with labor shortages and have service levels capable of justifying the highest selling rates in our history? Right? We have resort locations similar to the demand levels that the airlines are seeing to these resort locations like Florida, Mexico, et cetera. And we have resorts that are so popular right now, and even in 2021 due to COVID, in terms of their levels of weekend occupancy, that we have had higher rates than we've ever had in our history in the middle of the pandemic. Hotels that are running better profit than they ever have in their history. How do you justify that with labor shortages and service levels? That was an interesting question that we had to solve through revenue management. How do we yield inventory in scenarios where lockdowns occur? So take Greater China. You can lock down an entire city. We're seeing with Shanghai today. Very, very difficult to yield in those environments. And then COVID restrictions, varying widely by country. You know, how do we turn a market like Japan or Australia from a heavily reliant international inbound business to a domestic market? You know, these are not easy things to do, but these are things that we had to figure out in a COVID environment. So what did we do to respond? You know, the first thing, we had layoffs and furloughs, and we responded to it. Really here, we took our cluster and regional revenue management structure and completely turned it upside down. We added more hotels. We did more with less. We handled the business at hand in the trough of COVID. We adjusted our corporate projects to rely on only things that solely benefit from an ROI perspective to the property level. We drove profitable cash flow, and this is the one area that I think really changed everything and will continue to go that way in the future. We focused on driving profitable business for our owners and operators. You ask every single owner or operator, because we manage hotels, we franchise hotels. We don't own them. We do have owned assets, but very few. You ask an owner what he wants. He wanted cash flow, and he wanted profitable cash flow. He did not, or she did not, want to go and take business or try to drive down prices to induce demand that they knew did not exist. So maintaining profit levels, maintaining average daily rates at levels that were profitable for any business that we take became paramount for our owners and operators. We retooled our revenue management system, as you heard on the airline side, demands, forecasts, sensitivity models, to not chase demand, right? Because these systems have never seen these types of occupancy levels before. They didn't know how to respond. It took a retooling of our algorithms and our data science. Data and analytics, technology and innovation, other areas that we've spent quite a bit of time responding through revenue management. And what we really saw as a result here was a change in the commercial alignment. The commercial function that I sit in, really revenue management started leading through data-driven decisions. I remember the days in March and April of 2020 where everyone needed data. No one understood what was going on in their side of the business, and we had to be the stewards to put it all together. And everyone huddled around revenue management to say, what is going on? What are you guys seeing? And what can we do to help? And that's where you see sales. So we completely realigned the sales force towards leisure and small groups. We had hybrid meetings programs that were set up. All major chains did that. The revenue management data we were feeding were really adjusting to where those sales force should live. And in the beginning, it was the Sun Belt. If you look at, I didn't even need to know the data to tell you what hotels were doing well in the year of 2021. And if you told me they were in the South and they were in resort markets, I could tell you that they're doing well. I didn't need any data. So readjusting our sales force to really act and go where the demand is at so that we can get that business was a first priority. We changed our pricing and our rate fence structure. We had to advance care so that we didn't have non-refundable rates out there when we know the environment can't react to that, right? It's just not, it's not right. We had to advance care in that area in terms of making more flexibility for our customers. That's through deposit, cancel policies, lead time expectations, average length of stay, et cetera. We pivoted from global to sub-regional marketing campaigns to factor in recovery levels. It's not okay to send Greater China right now a wonderful promotion to go stay in Shanghai. Just isn't the time. Really understanding through data that we did third-party assets is going to help us, through data, understand where we pivot our marketing and making some automation around that so we know where to market, who was recovered enough to market to and promote to was very important. That data came from revenue management. Advancing care through offers that were pertinent. Our loyalty program. So many of the chains went out and did work from, we called it work from Hyatt. We had so much success competing against the shared workspace environment and having people stay for 7, 10 nights working at the hotels through our work from Hyatt package, or even our day use package, where you could literally go work for the day. If your kids were bothering you and you just couldn't get any work done at home, come to Hyatt for the day, 7 p.m. checkout. So we really tailored our loyalty to what we saw on an everyday basis. You didn't need to have a marketing degree to decide what we needed to do during that time period, because we were all living it ourselves. What do we need, and how can a hotel be of value to you outside of going to travel for your typical leisure destination? That bleisure, that business leisure aspect of it. Advancing care through specialized qualified offers. We had certain hotels that were full buyouts for National Guard in Washington, D.C. during the height of the pandemic. We had rates that were equivalent to our employee rates for healthcare professionals so that they can get places. We all knew the healthcare professionals were flying across the country to go to New York and to other areas that were hit deep. So getting our call centers involved in offering fenced rates not available to the public so that our healthcare professionals, our National Guard, and everyone could do that. And it was appreciated by the owners, the financial component of filling these rooms, but also doing a good deed in terms of getting people what they need most, which is beds when they're out helping everyone recover from the pandemic. And then communications. I'd say the biggest thing that came out of the pandemic for us was the acceleration of technology adoption in hospitality. You guys, if anyone has checked in a hotel lately, it is probably night and day. The amount of technology that was put into the operational process, contactless check-in, getting app alerts when your room is being cleaned. I mean, that's pretty cool. Being able to message any department within a hotel via text message or within the app. These are things that existed, piece by piece, maybe in the ultra-luxury segment a few years back. But if you look today across select service, across full service, there is a ton of technology that was added. Apple Wallet, another one that we at Hyatt just added in terms of World of Hyatt through the app for your digital key. But focus on the commercial aspect, the revenue management system, and what has happened. If you look at the movement towards third-party revenue management systems, you have some of the most major chains that have moved in that direction. You see heavy investments in decisions that are cloud-based, AI, machine learning, giving alerts through natural language processing so that you could really understand what's going on, and an average director of revenue at a property level could really understand all the data science in common English. Upgrades and refinements to our algorithms, centralized revenue management modules. We mentioned, we're doing a lot more with less. How can our revenue management system show a regional director 20 hotels and take the top 10 list of priority items for that day by ROI, and that's what he works on when he gets in the morning. Profit-based yielding, and this is really the future. Profit-based yielding over revenue-based yielding, we'll go over that in a second. Early stage development of attribute-based selling models. So I know Saber's in the room. They're working on it. There are many that are working on it. Most have been in our office lately. And this also will be one of the major, I'd say, differentiations and growth for the future. And we'll take a look at this. But if you think about profit, right, the one thing we learned that from the pandemic is we had to do profitable business for our owners in this environment so that they can keep their hotels open and not default on their asset. But why can't we do this when we're recovered? Why can't we take the definition of revenue or RevPAR-based yielding, what we do today, and say we need to do better than that? We need to start yielding for profit, not yielding for revenue. And that's going to happen in three ways: through pricing, by optimizing the price of the room type, by using profit by analytical market segment, determining the maximum amount of profit that you can take from the last room available for sale, and then overbooking, determine how hotel and room type level overbooking levels based on the profit potential. I think we'll all be sitting here 10 years from now, and anyone who is still yielding for revenue or RevPAR will be behind the game. I think the future of revenue management and hospitality is profit-based yielding. On the ancillary front, the airlines do this very, very well. But hotels, right? You can only skin the airline in terms of attributes in so many ways. But one of our hotels with currently 60 room types probably can have over 500 attributes if we really wanted to. How do we figure this out in the hotel industry? But in the future, I think all of you, because all major chains are working on it, I think each will have their own different way of getting there. But in the future, you're going to see a retailing model when you book. And this is actually going to be a guest satisfaction upgrade. Right now, you're stuck to a defined room type that may have all of the attributes you want, but maybe not everything. Breaking that down into actual attributes for your room and picking and choosing them, very similar to what the airlines did, is definitely in our future, and something that we're putting a lot of R&D and development into to figure out what is the best way to balance the guest expectations of how you guys book travel in the hospitality space with the earning potential and the profit potential for the hospitality and the hotels that bring this technology to life. And I will say, it will be a very, very big challenge, as it was with the technology hurdles in the airline business. But the North Star will be figuring out how to forecast demand and price in an ABS model within the revenue management system, which no revenue management system currently does today, with dynamic room assignment capabilities, sell and distribute via the CRS, and then fulfill by the property management system. This is not an easy task and will require development. So where are we today? Today, you can see the ADR recovery curve of COVID in orange, 18 months. You can see the ADR recovery period for the 2001 recession at 72 months. And you can see the Great Recession of 2008, recovery on average daily rate of 87 months. So quite a remarkable turnaround for the hospitality industry. If you think about where we are today, average rate is recovering heavier than our demand, 95 indexed to 2019 versus 87 on the demand side indexed to 2019. But you can see that for the hospitality, on RevPAR, our nominal recovery, not adjusting for inflation, will be met by the end of the year. And it's earnings week, this week. So far, two major chains, Marriott and Hilton, have released their earnings. We are soon to go later on this week. And I think if you go over their earnings and you see where they are at in terms of their recovery levels that they put into their commentary, it is very, very telling on the recovery front. 2022 may be the year that we get back to normalized 2019 levels for hospitality. And that is, if you just think about it, or if you told me that in 2020 or 2021, I would have told you you're crazy. So, the takeaways I have here: leaner and more data-driven revenue optimization. This is the learnings and the takeaways and the positives from COVID. And we all know that there aren't, you don't want to think about COVID in the positive, but from a glass half full perspective, there are great things that came out of the work and doing more with less, and how we actually reacted as revenue management in this area to become more of a viable commercial leader and lead the recovery charge. We've learned to tap into data science, third-party data sources, and they mentioned it. We actually put Google mobility data into our algorithms so that we knew how many mobile phones were pinging in certain areas because we had no idea where they are. Our historical data didn't mean anything. So it was huge to be able to do that and never have occurred with the speed and agility that we did without the pandemic. Technology and innovation. We've invested more in the past 2 years than we've invested in the past decade to modern our technology stack and prepare for new ways of optimizing and retailing our products through profit-optimized yielding, like I showed you, and attribute-based selling. And then breakdowns of silos, working together during the pandemic, although it was Zoom heads all day and not physical bodies in a meeting room. We've broken down so many silos to work together because there was no way to get these things done across the commercial focus without really working together, and that will last for a lifetime. Thank you.